Hi, everyone, and welcome to our session today on Inclusivity Alpha, how diversity can drive returns. Ironically, we have a full panel of women today, so it's not totally diverse, but it's a little bit different than what we normally see and certainly different from what I'm used to working on these finance panels. But I'm very excited with the women that we do have with us today. I have Henriette Kolb, the head of Gender and Economic Inclusion Group at IFC. We also have Georgina Philippou, the Senior Advisor of the Financial Conduct Authority. We have Barbara Rambousek, Director General for Gender and Economic Inclusion at the European Bank for Reconstruction and Development. We also have Heike Reichelt, the Head of Investor Relations and Sustainable Finance at the World Bank. And finally, Simpson, Managing Investment Director, Board of Governance and Sustainability at CalPERS. Thank you all very much for joining us today. To get started, I'm going to ask each of our panelists to answer a quick question for me, and then we will jump into a conversation. Hopefully we have a lot to cover, so we will be all over the place today. Everyone has really unique perspectives to bring in. To begin, I'd like everyone to tell me a little bit about how diversity can drive returns, as that is our overarching theme today. Can we start with you, Henriette?
Absolutely, Morgan, and great pleasure to be with you all to discuss this topic. I might be cheeky and add, yes, diversity can drive returns, however, only if combined with equity and inclusion. And we've seen this with IFC has Gender Lens invested for about 15 years, and we've seen very strongly that, yes, if you have diverse and inclusive teams, you can drive returns, but not just on the bottom line, but also if we look at the environmental and social and governance aspects. So we've done quite a bit of research, both on the pure profitability, productivity side, but also other spillover effects. And we've seen that if you are closing key gaps, in particular between men and women, at the leadership, at the workforce, at the consumer level, the supply chain level, and in the community, you can certainly prove a very robust business case. And I know we are in the midst of discussing what that business case in our follow-up conversations, but just as an investor in emerging markets, resounding yes.
Excellent, thank you. And Georgina?
Like Henriette, I'm going to say a resounding yes in response to that question, but also like Henriette, it's a bit of a yes, but. And the but is because it's early days. And we're still trying to translate what we see in terms of the data around diversity and inclusion into insight and wisdom. At the FCA, we've just done a literature review on the benefits of D&I, including in terms of profitability and impact on the bottom line. And there is a huge amount out there. We looked at over 100 studies from academics, special interest groups, consultants. And it's really interesting to look at the trends that emerge from all of those studies. Most of them, admittedly not all, but most, especially the more recent ones, show a very strong correlation between some aspects of diversity and better business outcomes in terms of profitability, investment performance and returns, governance and decision-making, conduct, risk management, creativity, innovation and problem solving, attracting and retaining talent, motivation and well-being of employees, and intellectual capital and quality products and services. The inclusion piece is especially important in those last two, intellectual capital and quality of products and services, because boosting intellectual capital and producing quality products and services is boosted by inclusion, perhaps because inclusion encourages people to talk to each other and to share ideas and experiences. It's also interesting to see that stock markets react positively to the recruitment of a diverse person in the board or executive, or to the introduction of quotas or targets in a firm. The studies have limitations, and perhaps we'll explore some of that a little bit later today. They do tend to focus on the top of the organization, on gender, as opposed to other protected characteristics, and they focus on diversity rather than inclusion. The really interesting thing is, if we can get the studies to mature and show not just correlation, but causation, that would be when it gets really interesting. It might be too soon for that, but I think that's the journey that we're on.
Thank you, Georgina. Yes, those are definitely things that we'll break into a little bit more, looking at these metrics, the research, and kind of where we are in the state of things right now. Barbara, could you tell us a little bit about what you think of our topic today?
Well, I'm risking actually being not very controversial here and just simply agreeing with the previous speakers. I would very much echo what we've heard. I think from my side, there is also a resounding yes. We certainly want to see more diversity, more inclusion, because we very strongly believe that that actually makes businesses perform better. In this context, we're looking at two different areas. We're looking at profitability, but also value creation. And as was just mentioned before, in terms of profitability, there are many different studies that show an increase in the bottom line due to more diverse teams. But of course, there is always an issue between correlation and causation, and we can come to that a bit later. But also very importantly, I think there's a value creation piece. And this is really also about stakeholder capitalism, and stakeholder capitalism becoming a lot more important. IPOs can only really be successful these days if they include a strong focus on ESG, including the S. In fact, there was a recent IPO of Deliveroo where there were massive problems because of the lack of a focus on the S. So it is not just a good thing to have, but it becomes an essential thing to do. And then, of course, if we look at the different channels in which diversity actually translates into a better bottom line, gender diverse teams can better understand the full customer base, including women, so that products and services can actually reflect the needs of women. And there are plenty of examples where this is not the case in terms of new technologies, new devices, from mobile phones to VC headsets to other things that are being developed that do not fit women properly. Women also bring different types of skill sets, and in a way, non-homogeneous teams can therefore reflect a broader range of views and a broader range of decision-making approaches. So maybe I'll leave it at that, but very happy to come back to many of these things that we just discussed.
Yes, excellent. Thank you, Barbara. Heike?
Thanks, and I'm also very happy to be here. And I also want to thank you for putting this topic on the agenda. And also for focusing on how it drives returns. That's incredibly important. So my role in the World Bank Treasury is to speak to investors, and the focus is on sustainable finance. So what I thought I would do is just quote an investor. I'm very happy to see Simpson here and look forward to hearing her views. But in the bonds that we've been issuing, we have been raising awareness for gender, and especially now for how women are disproportionately affected by the COVID pandemic. And I just want to read a quote from one of the investors in our recent bonds, which was the quote of the CEO of Volkswagen Group. And so the quote is, "Companies with gender equality make better decisions, which creates increased profitability." And I like that quote because it's just so simple. And there's many reasons for that. We've heard some of that today. Now, the World Bank, our focus is to lend to governments. We're owned by governments, and we lend to governments working on different development topics. And of course, gender is one of them. So what I can do as the panel goes on is maybe just mention a few statistics on how we can look at returns for government. And the statistics are related to GDP and wealth creation. And maybe I can mention some of that a little bit later.
Excellent. Yes, we'll definitely circle back to that. But I first want to give Anne a chance to also jump in on our starter question as far as how diversity can drive returns.
Yeah, thank you. Thank you very much. And it's lovely to be with you on this wonderful panel on an important topic. I think the points have been well made about the economic contribution that women make and how to ensure that leadership reflects all that potential. But I would like us just to imagine trying to justify the current arrangements. And it almost makes me feel uncomfortable that we have to say, well, in order for women to be included on boards or put into leadership positions, we have to have some a priori assumption this is going to give a pop to the share price or do something good for profitability. So I think, the current arrangement where we have one of the world's smallest demographics, in the United States and Europe, typically men over the age of 60 who are white, or as dear old Sir Derek Higgs called it, the community of the male, pale and stale. And he said he wasn't being rude or cheeky because he felt he fitted all three categories beautifully himself. So if we're really talking about this question of diversity, first of all, it's not just about gender. I think that's extremely important. We have to be able to take on our understanding of intersectionality. This is not just gender, but race, ethnicity, but also we have to understand exclusion and the impact because of poverty. If you look at the progress of inequality, certainly in the United States over the last 20 to 30 years, we have a shocking degree of exclusion, which is sort of structurally based into the system. So let me just finish with a comment about at CalPERS, how we're approaching this. So just as a data point, about 1% of financial assets in the capital markets are managed by women and or people of color. So just think about that as the starting point in terms of investment. We think that the economic arguments for inclusion are powerful, but I think also we know on the research front, when we're trying to show correlation, I'm reading a wonderful book at the moment called Spurious Correlations. One of my favorites is the correlation between the amount of cheese people eat and the probability that they will die tangled in their own bed sheets. So as we're data mining, looking to prove these things, I think we can lose time. And one of the problems we face with this data exercise, this data mining exercise, is that we don't have the standards and the reporting to really do a good job on the analysis. So on the investor side at CalPERS, we're saying this means as investors, we've got three things to do. The first is on the advocacy front, and we've argued at the SEC and also at IFRS that we need corporate reporting to include human capital management. In other words, we're arguing there are three forms of capital that matter in the investment process: financial, human, and physical. And that's how we think about these sustainability issues. But we need a reporting regime that captures all three. The second thing is we have the ability to make change as the owner of companies and provider of capital to managers. And over the last several years, through working in a project called the Diverse Director Data Source that we founded and now sits at Equila, we've managed to help over 1,000 diverse candidates be appointed to boards of US companies. Now, it's not enough, but it's a start. And then the third element is integration, which is in our own organizations. What are we doing to ensure recruitment, retention, work-life balance, mentoring, training, project opportunities, everything that's going to enable us to put these ideas of inclusion into practice at home. So CalPERS has just developed a new diversity, equity, and inclusion framework for the whole enterprise. And we're just appointing our first Chief Diversity, Equity, and Inclusion Officer. So there is much more to be done. And I would say throughout this process, what underlines all of that work is partnership. So working with advocacy groups and specialists and experts in the field is extremely important. But I'll come back to what I said at the beginning. I've never been asked in the appointment of a man to a board, will this boost profits? Where's the evidence that putting a man on a board is actually going to do something good for Alpha? You know, so we did be a little bit careful here about being put into some false data mining proposition, because I actually think the arguments are more fundamental and deeply rooted than that. Anyway, those are my thoughts for now. Thank you.
Thanks, Anne. That's an excellent point. And I'm also glad that you brought up that when we're talking about diversity and inclusion, it is fairly broad. We're not just talking about women. We are talking about a lot of different people outside of that pale, male, and stale. I love that phrase. And bringing these into the boardrooms and into the companies. And those are really important conversations that we need to have. And I'm sure today we will talk about some of that, but unfortunately we'll probably only get a slice of that conversation. And hopefully we can keep this going throughout our D&I conversations this week. Barbara, I wanted to bounce back to what you mentioned in your comments about the S and the ESG and how we talk about some of this as well. We throw around the term ESG a lot, and I think probably a lot of our people in the audience today have heard the term and have an understanding of what it is. But how does that fit in when we're talking about diversity and inclusion? Is that part of the S? Is that part of the G? Where do we look at it, and how do we consider it when we are investing?
So thank you very much. So I think it really goes across the S and the G, and to some extent even the E. If we look at the impact that we can achieve through focusing on diversity and inclusion, clearly in relation to the S, this is about labor standards, this is about a range of different areas and criteria that we can apply. And to be honest, there are a number of different matrices that exist in this context. This goes all the way from female leadership to equal pay and gender pay parity, inclusive culture, but also sexual harassment policies, how many women are on board, but then even going beyond the gender lens, looking at recruitment, retention, advancement, pay, equal pay for equal work, etc. So there's a whole range on that. But if we look at governance, equally here, I think the way a company is governed, the type of policies, but also practices that exist within a company in order to foster a solid corporate governance, also in relation to social standards, in relation to diversity and inclusion, is becoming increasingly important. At EBRD, we have developed a corporate governance action plan program. So we actually work with our clients to undertake first a baseline assessment to see the extent to which they have diversity and inclusion policies in place, the quality of those, and then also work with them to improve them, to really put in place specific actions to help the companies to enhance their workforce diversity. But ultimately, really, it's also about talent management and really improving the way that companies function overall.
Excellent. Heike, I wanted to bounce back to what you were talking about too in your response to the first question. You mentioned some statistics that you could bring up. Can you tell us a little bit more about that?
Sure, thank you. And I definitely take Anne's point that it's not just about gender, but that's a part of the discussion. So what I wanted to do is talk a little bit about how at the World Bank we engage with governments, and it is a matter of laying out the financial implications of why it's important to focus on this. So one of the statistics I wanted to mention was considering that on a country level, there's an uneven playing field between women and men. And in terms of GDP, there's estimates that say that this uneven playing field that goes really across the different ranges, starting with human capital, access to healthcare, education, access to finance and technology, legal rights, and of course I'm talking very much also about emerging market countries here, and also social and cultural factors. So this uneven playing field is estimated to cause losses in GDP that range from about 10% of GDP in advanced economies to more than 30% in countries in South Asia, Middle East, and North Africa, as an example. And another way of looking at it is the opposite view, which is looking at the upside. There's a recent IMF publication called Closing the Gender Gap that I found quite interesting. Now I say recent, but it's pre-COVID, so these numbers would be slightly different when done now, probably worse. So they calculated that increasing women's employment boosts growth in incomes more than previously estimated, and it really goes beyond improvements that come just from adding workers. And among countries where the gaps in labor participation rates were the largest, closing them adds 35% to GDP on average. And most of those gains, 80%, comes from adding workers to the labor force, to the formal labor force, and 20% is from boost in productivity brought by greater, in this case, the analysis was gender diversity. And the reasons for that, we've heard some of them already on the panel, but one that I like to highlight because I see it in work is just different attitudes towards taking risk and collaboration. It really brings for a better team dynamic if there's diversity, not just gender, but also backgrounds, race, experiences. And then the third statistic that I wanted to mention refers to global wealth. And we've heard this a lot, that even for similar jobs, there are big pay differences. And there's an estimate that for every dollar in earnings expected to be earned by men in the future, women are expected to earn only 2/3 of that. And I mean, this is an issue in all countries. And there was a study done looking over the lifetime earnings, saying that if women could have the same lifetime earnings as men, global wealth could increase by 172 trillion, and human capital wealth could increase about 1/5 globally. So there's just some statistics that I wanted to mention. Of course, the question is always, how was that calculated? What's the data? What are the assumptions? But I just thought that they were interesting in looking at this from a country level that really shows the value and opportunity of focusing on this and why it makes sense.
Yes, definitely. Excellent. And I know that the IFC came out with a study on gender diversity in the PE industry in emerging markets. Henriette, could you tell me about what that study found?
Yeah, sort of it did data mine and really look at, where women and men at in terms of making investment decisions. And then how does that translate really into capital allocated to women founders and women-owned companies? And I think I totally agree with Anne's point around, we can be labeled a business case forever, and we haven't had to do that for other groups, right? And who are in position of powers. At the same time, I think the data mining that uncovers those vast gaps that I will just mention in a minute shows to those who have privilege and power just how uneven the playing field is, and not everyone is aware at all. And so I think just showing the depth of those gaps and just how we can hopefully help close them is very key to us as an investor. And so what we did was we looked at 700 funds and 500 portfolio companies in emerging markets, and we found that only 11% of investment decision makers are women. And we found that of those 700 funds, only 15% had gender balance, meaning at least 30% of any one gender represented. 15%, 70% were all male. And that has really severe impact for a variety of reasons. One is, of course, the profitability or the rate of return was higher for the ones who had better gender balance. But then in terms of asset allocation, what we've seen is that female partners and investment decision makers are actually allocating almost double the capital to women-owned enterprises. So we've seen on average, only 7% of venture capital and private equity in emerging market goes to female founders. But if you have gender balance at the investment decision making, you actually get at least to 12%. That's still nowhere where we need to be, but you can just directly see that impact diverse groups have in terms of decision making. And of course, that goes back to the network effect. But even more interesting, I think, also in terms of claims and perceptions. So we interviewed a bunch of limited partners as well, and it was interesting because 65% said, no, we care deeply about gender. It's very important to us. But then when you ask the GPs, only 25% actually were asked about, composition and diversity during the due diligence. So there's a lot of claims in the market, and the actual delivery is oftentimes far from where those claims are. And so I think that's kind of important to point out. And then lastly, I would say, just very quickly jumping on Anne's point around walking the talk. As IFC, I feel very strongly, if we ask our clients, be it funds or banks or agriculture companies, whatever it is around diversity and inclusion, we have to be the first one to lead on that. Otherwise, it becomes very quickly a very hollow conversation. And so just for those who are tuned in, just recommend a couple of things you could potentially do with your organizations to start at home. One is getting certified. There's the Economic Dividend for Gender Equality certification, which looks at retention, promotion, recruitment. And there's a new form, which is Edge Gender Plus. So it also is not just a binary assessment. So that's really, I think, important. And so that's one, it can be done. The World Bank Group did it the first time in 2016, and it benchmarks you into 3 groups, right? You are sort of basic, silver and gold standards. Only 3 companies in the world have reached gold. The World Bank Group is at the base, and it has to do with our shareholders as well, because you have to have a diverse composition at your board, and that's controlled by sovereign governments. But I think the point is not whether you end at base or silver or gold. The point is that you're transparent, you undertake the analysis, and you reveal that to the world and to your shareholders and clients, and encourage others to begin the journey. So I think that's one. Then the second one, obviously, as a bank, we have really squarely focused on financing women entrepreneurs. We're actually coming up to exciting to the 3 billion mark in terms of our Banking Women program, which is really great. But we all know women also need contracts. And so on that, we did, as the World Bank Group, our own analytics and said, how much are we spending on women entrepreneurs? And it wasn't pretty. We came out at 3.4% of our annual spend goes to women entrepreneurs. It's still higher than the large corporations average, which is 2.2%. But we said we publicly announced we double that by 2023. And so working really hard on that. Again, it's not revolution. And I wish we would be more towards revolution, but it is at least starting the journey and making that analysis and saying, this is our spend and here's where we could move to. So these are just a couple of thoughts on this topic. And then excited, I'm going to wait for that, just to also give you a quick highlight on our recent e-commerce study in Asia and Africa, and where women entrepreneurs are when you move from offline to online economies, because that obviously has been just accelerated during COVID-19, including the less attractive features on digital lack of connectivity, bullying online, sexual harassment online, and so on and so forth, but hopefully you can fill that in later.
Excellent. Thank you. Yeah, we definitely want to touch on that. Speaking of all this research, though, Anne, I know you started to talk a little bit about some of the hurdles that we're facing with the lack of standardization in data, and what we do have available to allow you to assess diversity and inclusion. Can you tell us a little bit more about what you look at and where some of the challenges are?
Thanks so much for all these wonderful comments from the rest of the panel. That's just very inspiring. Wonderful to hear about all this great work that's going on. What we're doing at CalPERS is arguing that the regulators need to pick up the disclosure issue. Now, if you look at the SEC, which governs disclosure in the US, I sat on the Investor Advisory Committee at the SEC until recently, and one of the projects we worked on there was to build out a framework for human capital management reporting. And this would pick up issues like gender and racial and ethnic diversity, but it would put it in the context of the economics. In other words, looking at employment status, so whether you have a full-time job or part-time job, whether you're on a 0 hours contract, that makes a huge difference. You can have all the diversity programs you like, but if people are in poverty and economic insecurity, then the inclusion, I think the point was made so well, equity and inclusion need to be part of our thinking here. But also we were advising that the SEC needs to have standards on reporting health and safety, employee engagement, particularly when workers are trying to organize. We can see sometimes a very rough and at times quite tough approach by companies. But this framework was based on, back to the point about data, as best we could with the patchy and bitty reporting that we've got. It was based on evidence that was drawn together and vetted by the SEC staff. So we had a number of meetings with Gary Gensler, the new chair of the SEC, as part of his outreach to investors. And one of those is specifically focused on human capital management. So we're expecting the SEC to pick this up. Now, you also will all know that the International Financial Reporting Standards Foundation has decided to establish a sustainability standards board, which we're delighted about. They're going to look at climate change reporting first. We argued that they needed to have more joined up thinking, and they should be thinking about financial, human, and physical capital in a holistic way. But fair enough, they'll do climate change first. But we're also aware that issues around human capital management, diversity, and inclusion are quite market specific. What you do and don't have by way of information and protection in the United States looks very different from the situation say in Europe or in certain markets in Asia. So the question about the reporting framework does need to take that into account. That then poses the question of what about the private markets? And I know that's something that this panel has been discussing. So I wanted to flag an initiative that's being run by the Institutional Limited Partners Association, or ILPA as it's known. This was set up by investors like CalPERS some years ago, basically to give a platform through which the limited partners who provide the capital can have a dialogue with the general partners who invest. And one of the things that ILPA has worked on in recent years is establishing a set of standard DDQs, due diligence questionnaires, which focus not just on ESG, but also on diversity and inclusion. We've supplemented that through having our own surveys of external managers where we use them, particularly in private markets, to get a handle on what the level or the lack of diversity is at the moment. But ILPA, I think, following the protests around the murder of George Floyd and a new sense of reckoning in the United States with racial injustice and the history of racial injustice in the United States, ILPA has also formed a diversity, equity and inclusion committee. One of my team members sits on that, James Andrus. So I think in the private markets, we're going to see similar things moving along. And I would flag, even in terms of the incentives, understanding that there are dollars on the table, or euros or yen, but there's money on the table here. Carlyle has set up a credit facility, which actually offers a cheaper rate of interest to portfolio companies that they invest in that meet progress targets on diversity. So I think this is a really good recognition in private markets as well as in public markets that investors are understanding the broader economics around this issue, and really just saying it's a very frail proposition to think that if a tiny minority runs everything, you're going to get the best range of talent, the best range of perspectives, the best multifaceted approach to risk. No, probably not. Probably better to have this inclusive approach and thereby not only, I think, reflect the values of the organizations that we work for. That's extremely important. But I think there's very good indication, of the broader social and economic benefits. And when all of this is working well, then investors actually can harvest returns which come through that process. But there's a lot to be done, but it's exciting to see everything that's going on.
Yes, excellent. Barbara, I know you were eager to jump in there.
I just wanted to jump in briefly, actually, after Henriette, just to mention a report that we also did, particularly in Central and Eastern Europe, on venture capital and women in venture capital. And I have to say that in Central and Eastern Europe, many of our colleagues, but also stakeholders keep saying, oh, gender gaps are very low in our region. Gender inequality isn't really an issue in our region. Why don't you look elsewhere? But basically, we're fine. And so we looked at venture capital in particular because we know that the decision-making authorities there really drive investments and also returns. It's actually a good area to look at what does diversity do there in terms of the bottom line. And unsurprisingly, we found, of course, that women are severely underrepresented. In fact, only 5% of venture capital teams are led by women. And we saw that across the entire region. But I think what we also found, which was very interesting, is that women-led businesses outperform in capital productivity by 96%. So women-founded startups generated more revenue per euro invested, way more revenue per euro invested compared to their male counterparts or male-led teams. So I think we really managed to break up some perceptions there where people thought that gender inequality is not an issue, but actually showing that it is, particularly in relation to different areas. What I also wanted to say is that in order to address that in a way, what we're trying to do at EBRD is to really look at inclusive financial systems overall, and to build diversity and inclusion into a range of different areas that we work in. So that starts with venture capital, that starts with our equity funds to introduce a focus on ESG. It also starts with the partner financial institutions that we work with. So we lend to them, they then on lend, but we actually look at them also as employers and help them to better understand to what extent they create opportunities for women to progress into leadership, into management positions, to have the right skills, to have partnership with universities and so forth. So we develop gender action plans and diversity action plans with our partner financial institutions. Then, of course, it's through the on-lending to focus specifically on women entrepreneurs, but also young entrepreneurs in less developed regions, or to pilot new technologies, digital technologies, to extend lending to refugees or to other people, other groups who find it harder to access lending because they lack collateral or they lack assets or credit history. But then also actually expanding focus on diversity and inclusion to SMEs themselves. And here we are partnering with EDGE, who have developed a certification that is in a way a mini EDGE for SMEs to help them to be in a way become better employers and to offer better types of career opportunities. And then at the macro level to look at the regulatory framework, the legal framework, a much stronger focus on sex disaggregated data collection to inform policy choices, but also to undertake investment climate reforms with a specific gender lens in order to remove some of the regulatory barriers that still exist for women entrepreneurs, but also entrepreneurs with different backgrounds.
Excellent. And Georgina, where do you see some of the gaps right now in the research, and where do you think we could fill in?
Yes, I mentioned the research, the literature review that we've done of 100 studies, and it really struck me that there's a whole lot further that we can go. So we need studies that look at the whole of an organization, not just the board and the executive. We need to go further than gender diversity. We need to look at inclusion, which is much harder than diversity, I would argue. We need studies that look at causation as well as correlation. And we need to make that link between D&I and the wider emerging ESG agenda that we have talked about. So there's a lot more that the studies can do. And of course, we need some longevity as well so that we can see the trends over time. But just to echo something that Anne and others have said, it could be that with studies, we are barking up the wrong tree. Studies can be pulled apart by clever people, and we never have to prove that it's a good thing to have all male boards, so why should we have to prove that it's a good thing to have diverse boards? And what happens if a diverse board produces poor results? So I want the conversation to move on from doing studies and for the incentive to do this just because it's the right and decent thing to do, and also because we have no choice. Our future employees and our future investors are demanding and will demand D&I of us as leaders and us as organizations as well. So our employees will want a sense of purpose and value and collaboration and fun and a sense of community. They want us to be compassionate as leaders and as organizations, and those things line up precisely with diversity and inclusion, I would argue. So I'd like us to move away from studies because they can be pulled apart. And I'd like us just to focus on doing the right and decent thing.
That would be great. I hope we can have that shift in conversation happen. Henriette, maybe you can tell us a little bit about how investors can ensure that diversity and inclusion is at the core of business interests. How do they have those conversations, and what should they look for?
Absolutely. But Georgina, I think you made such a great point in terms of being kind and compassionate and building a sense of community. I think COVID-19 has taught us that that is absolutely fundamental. And I think there have been shifts in leadership style towards more of that. And I'm just hoping so much we don't need to wait for the next pandemic for that to be sustained, and that there are some wonderful examples that stood out. But I think we need to really remind ourselves in terms of creating a sense of belonging, autonomy, as well as innovation in order to then really kind of make sure we have diversity, equity, inclusion lived and breathed and not just on pieces of paper. So I thought your comment was just spot on, in particular in the light of, you know, looking at the world through the COVID-19 lens, and indeed, as Heike said, you know, where all gaps of underserved communities have just been so much more amplified. But just what can we do in coming into the action in order to keep this on top of mind? I think one is corporate targets. I mean, if you have corporate targets on your business, right? I mean, don't think you have a separate D&I compact. Why would you do that? You need the D&I compact to be part of your corporate target, your business target. So I think that merging is very, very important. The second, I think that was mentioned by Barbara, is also incentives and incentive structures for investment officers. And so studies are one part, but then in fact, you know, saying how your clients are going to demand that, your shareholders are going to demand, is very convincing. So creating the incentive structures in an institution that help you sort of move to this topic as part of your core deliverables. The third one is innovation. And, you know, I think the market is obviously accelerating so rapidly, and innovation is, and then really trying to place the diversity, inclusion, and equity discussions at the nexus of the next growth sector is key, because otherwise we're training, you know, women to do, you know, little embroideries here, a little bit of, you know, stitching there. No. It has to be, where are women in ride sharing, if that's an industry that's growing or not growing, where are women, you know, on e-commerce. And that's why we really wanted to find out, to say, well, you know, e-commerce is drastically expanding, in particular in Asia. So where are women? And so what we found was really interesting, that, for example, in the Philippines, 2/3 of the sellers were already women, but women use e-commerce platforms to grow their business, whereas men use these platforms to start their business. So it was very interesting also to see that, you know, lots of these platforms now are super platforms, not just commerce, but also finance and so on. And of course, not surprising, women were much less likely to take up financing on those platforms for a variety of reasons. So my point is, innovation needs to be intrinsically linked with diversity, inclusion, and equity, because that's where the world's moving. And so we need to early on get into those business models, rather than waiting until the business models are being baked and then coming and retrofitting into the design, you know, a more diverse group of users, providers, and so on and so forth. And so that, I think, is key. And then the last point is just to repeat very quickly, walking the talk. I mean, you've got to have that as part of your strategy. And then maybe one more, which is impact and evaluation. And the World Bank is actually doing an amazing job around measuring the impact of closing key gaps between men and women. It's the Gender Innovation Labs. And so for those of you who love research and academic impact evaluations, take a good look at them. Great work. And we're hoping to do more on the private sector side of that, because oftentimes we're all pioneering and sort of trying solutions, but we still have very little understanding what's sticky, what sticks. And obviously it has to be tailored, has to be context, geographic specific, sector specific. And so I think we know too little about what actually works, and have focused for a long time as an investor on the business case. And that's crucial, and was crucial to convince our clients. But then what is the actual impact for the end users? You know, we are still falling a little bit of short collectively, I would argue, as multilateral development banks and development finance institutions, to speak to that last mile impact.
Maybe I can just add to that. I want to pick up Henriette's point on, I'm going to call it holistic view. So integration, just seeing things broadly. And in our conversations with investors, when they buy our bonds, interest in gender has really been amplified in the pandemic. We issued bonds to raise awareness for gender a few years ago already, but just this year we've issued 3 or 4 of them for a diverse group of investors. And what we do there is we highlight the programs that the World Bank has, our strategy, and the focus is not just, it used to be that investors wanted to see women's projects when they asked us, you know, how we integrate gender. And so we have a conversation about how gender goes across everything that we do. It's about access to healthcare. It's about access to education and figuring out, as Henriette said, what the differences are and trying to tackle those. It's also about providing access to better jobs, ownership of assets. We've talked a little bit about it, but financial inclusion, giving women the same rights as men, the right to own assets, the rights to have bank accounts, and then voice and agency. And we haven't talked about that here, but a big thing is domestic violence. And if you look at the statistics there, 80 to 90% of that is against women. And it's a huge problem in all countries, even countries where you wouldn't think it's the case, but especially also in some emerging market countries and developing countries. And these bonds that we've issued, sustainable development bonds, give us the opportunity to have these conversations with investors. And it's actually surprising that, well, maybe it's not surprising, but it's really good to see that the interest is global. We have these conversations with investors in Asia, with investors in the US, with investors in Europe, in Scandinavia, and it's bringing things to a different level. But it's really this holistic view, and not just looking at a woman's project, but thinking about how gender matters in all different areas. One example that I like to use is transportation. In many countries, women don't have jobs in the city because they don't feel safe taking public transportation. So finding ways to address this, whether it's having special bus lines only for women or having special space for women where they can feel safe is important. So this is something that I just wanted to highlight, is this holistic view to gender equity and inclusion.
Excellent.
Maybe I can come in here very quickly as well, just to build on what both Henriette and Heike have said. I think these are very, very important points. And in fact, one of the examples is also the interlinkage between investments in green economy transition and green technologies and the focus on gender. So here, I mean, for example, just to give the EBRD example, we look at supporting particularly women-led SMEs, women entrepreneurs, to be able to understand how to adopt those new technologies, the benefits that they could create for their businesses, and then to access finance on top of that. So in a way to interweave this focus on green investments with a focus on gender. The same goes for new sectors that really are emerging now, renewables, to make sure that women have the right skills through STEM routes, but then not just getting those skills, but also translating those into careers in the sector. And having role models there, and working from our side with clients that are in those sectors in order to improve their HR policies, their practices, and how they recruit and then also retain women. It goes further into infrastructure investments. We have a green cities framework where we look at basically working with city authorities from the policy side to the investment, anything from urban transport to municipal services, to ensure a focus on green, but also to ensure that these services are inclusive, that public realm can be used by everybody, by women, but also by everybody else in the same way. So I think it's those linkages that really are important. And then one other thing I wanted to mention that hasn't come out yet is care economy. I think that's really an important area that provides in a way both investment opportunities in terms of private sector care, from elderly care to childcare, healthcare more broadly, but also of course targets women in a number of different ways, because women tend to be employed in those sectors to a large degree, but also of course having better childcare, having better elderly care can free up women in order to retain or remain in the workforce, or re-enter the workforce, or enter the workforce in the first place. So this for us again is a huge area that is increasingly important as an investor, but then also as an organization working on policy.
Excellent. And Georgina, I know you want to jump in there.
I do, yes, before we run out of time, because Anne and Barbara both mentioned the magic word regulation, but at least it's a magic word to me. And you will have noticed that the FCA has become, in recent times, increasingly vocal on the subject of D&I. And we are going to take that further. We are going to open up a conversation with regulated firms and with the industry about the role of the regulator, about what kind of policy and handbook and rule changes and data we need to collect in order to move the dial on this. You know, and the basic message is We take this seriously and we expect regulated firms to do the same. So what kind of structures can we put in place to ensure that that happens? So be careful what you wish for and watch this space. There's going to be a whole lot more from us on that side.
Excellent. Well, to wrap things up, I do want to focus a little bit more on COVID. We keep mentioning that. Of course, it's something that is coming up in the way that we're looking at so many things now. So I want to think about working from home in particular and how that has impacted inclusion practices. Anne, could you maybe tell us a little bit more about what you've seen with that?
No, thanks very much. I think women are very vulnerable at the moment with all this planning on teleworking. And first of all, we should acknowledge that women and people of colour have been the frontline workers who've been most exposed. The rates of death in communities of colour in the United States have been horrifyingly high. So you both have women overrepresented in low-paid essential frontline work, which has had to continue through the pandemic. And for women who are in a teleworking option, the whole debate about the return to work is really posing this question about whether it will actually make it more difficult for women to participate in the on-site workforce, because women are the fastest dropout group in the United States for employment reasons, women with children. So as you know, exit from the workforce during the pandemic is very heavily gender biased, particularly for women with taking care of children and also other elderly relatives in the United States. Anyway, the concern about coming back and how we manage teleworking is if we don't pay attention to the gender dimension of this, we could end up with exacerbating some of the worst impacts of work-life imbalance on women. Some of the work that we've been looking at shows how those people with childcare responsibilities have been at home, juggling childcare because schools and other facilities have been shut. At the same time, with the return to work, our own sort of polling of staff shows that people with children at home would like to have more flexibility. They'd like to work from home part-time, but then there's a concern about, in the work culture, women are less present. And this could then add to the continuing problem of women not being promoted and given opportunities because they're missing out on the social network effect in the workplace. So I think for women, it's a very complicated position at the moment, both because of women's concentration in low-paid work, frontline essential work, which has been where the pandemic has hit so hard. But also, I think the whole broader issue, as was said, about childcare and education facilities and access to childcare for women who've typically taken the brunt of all of that, that's got to be rethought as well. However, the broader question of how all that pans out in situations of real poverty is another dimension again. So I think this question that was put beautifully earlier is the context of geography and economics, culture, wider society. We've got to sort of fit all of that in. But certainly women on the pandemic, I think it's fraught with concern on our side. But I think what it means is that we just have to make sure that in all the return to work planning, we've got to have some, thoughtful approach to make sure that the gender impact is not being overlooked. Thanks.
Well, that segues perfectly into the last question I have that I will have everyone kind of briefly answer. And that is, do you think COVID has changed how you as issuers, as investors, as participants in the market are looking at the importance or the role of diversity and inclusion? And it sounds like you are. Maybe you can jump off and start for us with that.
Yeah, you put it very well. However, the response to the pandemic is also something for us to follow. What the pandemic meant is we have had a return of government in markets where it's sort of assume that the free market, a laissez-faire approach is going to be best for all, when in fact we can see what the problems are. So the return of government as a partner is one issue. There is the restoration of global thinking, because the pandemic knows no borders, and also the return of science as, you know, the right hand and the left hand for policymakers. And so this theme of partnership, which involves, you know, the scientific community, civil society, companies and business with a global approach, this is the kind of thinking and action that we need to deal with all of the outstanding issues around the Sustainable Development Goals, just to take one version of a to-do list for the world. So I think, particularly in the United States, we see with the change of administration these big opportunities, but we've got to use this momentum that we've found in dealing with the pandemic to drive other global development issues as well. So it's a very mixed blessing to say that something with such tragedy and such suffering and such horror has also shown us the way we need to work to overcome these global systemic issues that still confront us all. Thanks.
Thank you, Anne. Henriette?
I just keep it very short because I know we're up for time, but the care infrastructure needs to be resolved once and for all. We cannot continue to drag a problem that's been in existence for over 2,000 years into the next century. It needs to just be fixed. And that means governments, employers, families, cities have to come together and redistribute care work so that fathers can be as engaged on the care of their kids and care of their families as mothers and others. So I feel like that's the one thing that we as an investor have started working on way before COVID, but we are just, you know, so encouraged that finally there seems to be a momentum, and we really hope that others will join us as investors to say we have to double down on providing better care equation.
Thank you. Heike?
Your question was whether it's changed the importance. I really think it has put inequality at the top of the agenda, because the pandemic is also a crisis of inequality. And it's really shaken up all the systems, everything, supply chains, education systems, food systems, healthcare systems. It has shaken all systems. And I think that in one way or another, everyone has some sort of a trauma. And I agree with what has been said. We really have to think about this new normal that everybody's talking about, and teleworking and home-based work, that it doesn't make us go backward in some things that we've achieved so far.
Excellent. Barbara, what are your thoughts on that?
Well, equally, I think that the COVID crisis has really highlighted, in a way, the fragility of all the progress that has been made, particularly on gender equality over the last years, decades, actually, and how easily that can be rolled back, and the continued need to focus on that very strongly, in a way beyond the business case, but as an essential thing, as something that really lies at the core of what we do. So I think that that's one thing, and that is very much reflected also in our priorities. But also I think if we do look at the business case, if we look at labor shortages now as part of the recovery, you know, maybe there's also a slight rebalancing coming here, because companies are only ever as good as the people that they employ, the talent that they have. And if you only fish in half the talent pool, or even less, because of all these characteristics where you exclude people, then ultimately you're not going to be successful. So I think maybe there's a bit of an opportunity in there as well for us to work with our clients as employers, and also for us as investors to further this agenda.
Excellent, thank you. Georgina?
Thank you. It used to really annoy me at the start of the pandemic when people said, oh, this is dreadful, but we're all in it together, because we're not all in it together. You know, we might be in the same ocean, but in very different boats. But I hope that a couple of good things come out of this, at least on the working from home debate. I hope that the fact that a lot of us have been working in this fashion degenders the working from home debate. So it stops being connected to something that women do. And I also hope that with these different ways of working, we start to focus on outcomes and productivity, and not jackets on the back of chairs.
Excellent. Well, thank you all for joining us today. This has been a great conversation, and I think we've barely touched on everything that needs to be said. I have many questions left that we could have gotten to, but this has been a great 60 minutes. Hopefully we can continue the conversation this week and offline. Thank you again to all of my panelists.